Hello and welcome to this video presentation from Dover Financial Advisors. This video demonstration is a demonstration of our RODO SOA generator for risk insurance advice. The purpose of this video demonstration is to demonstrate to you just how quickly and efficiently the non-client meeting elements of providing risk insurance advice can be met. The way we'll proceed is we're going to work through the entire process from the point at which you meet a client to the point at which you have finalised a statement of advice to your client and show you just how, how effectively and efficiently that part of the process can be completed. The first thing you must do, of course, is to meet with your client, and one of the outcomes of the meeting with your client is that you will have completed a fact finder or a client questionnaire. Even better, your client will have completed that document and brought it to you. Very important that that document be signed by your client, as we see here. That signature obviously attests that the client agrees that the contents of the fact finder upon which you're basing your advice are accurate and have been provided by her. Once you've gathered the information, which would include, of course, the client's assets, liabilities, the client's income, and the client's objectives, you are then free to proceed. Now, conveniently for this demonstration, this particular client has come with the specific objective of obtaining insurances. As we can see from the front page here, she is a separated mother of 2 young children, and she is looking to insure herself, presumably as the children's sole primary provider now. Client's name is Claudia Ranieri, which is a bit of a nod to the premiership winning coach in the English Premier League, and her date of birth 1st of January, which is a very convenient date of birth, 1981 as of 2016. She's of course 36 years old. So the first thing we do is we meet with the client. We gather her information. We are aware that she's a single mum. We are aware that she's working full-time with an income of $85,000. We are aware that she has some debt, and we are aware that she has 2 young children. We are then free to discuss with her what kind of insurance she requires and how much of each kind of insurance she requires. Now, in this case, we're going to work on the basis that the client wants to insure her life so that her children will receive a financial payment in the event that she dies, and she also wants to insure her good health so that if the bus that hits her doesn't kill her, she will still receive payments to further her financial needs, and that she also wants to insure her income. Now, we're using a simple needs analysis basis here to decide on the amounts of life and TPD that she needs. As you can see in the highlighted box, there are 3 particular needs that she is aware of to do with her parenting. In this particular case, the client does have an ex-partner who is also her children's father, and so that can be factored in to her own insurance needs. So we have in this column here her expected expenditures that she's contemplating insuring herself for. School fees of $350,000, paying out her mortgage of $300,000, and then miscellaneous costs of raising a child, $250,000. She decides that she wants that she is going to externally insure the first 2 of those expenses, $350,000 for school fees and $300,000 for the mortgage. We describe that here, where we say that the client decides she wants to insure such that her policy will pay out her mortgage and her children can each have $175,000 dedicated to private secondary education. Now, that figure might seem high, but for that much money, the kids are probably wearing second-hand blazers. She will, as it says here, she will leave her ex-husband to provide otherwise for the children in the event of her death or permanent disability. So that is how we establish the type and amount of life and TPD cover. Income protection, that's a slightly easier calculation really. As the children's primary provider, she wishes to insure for the maximum amount possible, which is 75% of her pre-illness or injury income, currently $85,000 a year. which equates to an insured amount of just over $5,300 per calendar month. What I wanted to demonstrate to you here is that, if we can get that other box to go away, is that the client has actually signed. That's interesting. The client has actually signed the needs analysis, which can become a very important part of your file. If down the track the insured event happens and somebody decides to take action against you claiming that the client was underinsured and that there was no logical basis for the amounts insured, having the testament that the client knew of your method and in fact agreed with it to the extent that she signed her acknowledgement of it can be a very good advisor protection device. So, having decided on the types and the amounts of life insurance, we can now move to calculating or deciding how much or which particular insurer will be used to provide the insurances. Here at Dover we're using Life Risk Online, but you might use some other reputable form of quoting software. These softwares are far easier than, far and away the easiest way to gain the quotes that you need. We put in the details here. Claudia Ranieri, her age at her next birthday is 36, her date of birth is the 1st of January, which is convenient, might have been why I picked it. She's of course female. We're going to say that she lives in Victoria and that her income ex-super is $85,000. She's an employee, she's looking to pay stepped premiums, and she's aware and can pay her premiums annually. She's aware that doing so will actually reduce the premium payable to a small extent, but a small extent can be important. Her occupation, she's an administrative manager. So we put that in and we find that all of the insurers covered by this particular form of software will contemplate providing insurance to someone of her occupation. There we go to put in the details. As shown, we have decided that she's going to have $650,000 worth of life insurance with linked TPD. The TPD will be her own occupation, and depending on what you'd like to do, you might look at some of these other elements of that cover. Given that the example or the reason behind this video is really to demonstrate to you the efficiency with which we can proceed, we won't do any further here. The Risk Online software, as soon as you click on the income protection box, as I've just done there, will pre-populate with comprehensive 30-day waiting period, paid benefits to the age of 65 on an agreed value basis. You can of course vary those, but given her circumstances, that is what we would recommend for Claudia. And we then ask the tool to calculate its results and to provide to us firm quotes for each of those types of insurance. Now that can take a while, as these asterisks are demonstrating. So in the interim, let us go and start preparing our statement of advice while we're waiting for those quotes to arrive. Prerequisite, let's have a look at this. Before proceeding, please ensure that you have completed the following. You've met your client and you've completed the fact-finding process, including a needs analysis. That's what we've just done. Researched your client's risk insurance needs and compared quotes. That's what we're now doing. Generated a PDF from your risk research tool showing the quote comparison between these insurers. That will happen once the quoting software has done its thing, and then created an electronic copy of the fact finder and the statement of advice checklist ready for upload before you finalize this process. That is as simple as dropping those documents into a scanner and emailing them to yourself. Advisor info, this will be pre-populated. You fill it in the first time you use RODO, and unless those details change, you never have to look at it again. We then go to actually creating the statement of advice. Now I will say at this point we're 9 minutes into the administrative work involved in providing this statement of advice. We will date the statement of advice today, the 4th of May 2016, which just happens to be Dover's responsible manager Terry McMaster's 55th birthday. How do you charge your client for this SOA? We're going to say it's commissions only. We now put in the client's details. She's a Ms. She's avowedly a Ms. Claudia Ranieri. Her date of birth was 1981, January, and she was born on the 1st, which was a Thursday that year. Marital status is that she's divorced. she's in good health. Her employment status is that she is employed. Her occupation is, as we said, an administrative manager on a gross income of $85,000 a year ex super. Does she have any children or financial dependents? Yes, she does. Children and other dependents details. Her first son, her first child, his name is William. These are the children's details here. His name is William and he is 5. William is 5 and he is her child. She has another child, Cindy, who is 3 and who is also her child. We tick those boxes. Your client's a superannuation, name of super fund. Let's say it's Care Super, she's an administrator. The super fund balance, as we saw, was $80,000 and that is owned by the client in her own name. Strictly, of course, the benefits are owned by the trustees of the fund, but they're owned for her beneficial interest, so we can say that she's the beneficial owner. The client's assets. We know she has a home, and that home is valued at $600,000, and again, it is in her own name, singly, not with a partner or in joint names. She's holding $10,000 of cash, again in her own name. Excuse me. Does your client have any liabilities? Yes, she does. She has a mortgage, so that mortgage is worth $300,000 and it is in her own name once again. We've now put in her net assets, very important. We know her financial situation. We've put in her income and we've put in her net assets. She's going to pay her premiums annually. Does your client have existing life insurances, including those in their super fund? Well, she's a member of an industry super fund. She will have default cover. Now we're going to say that she started her job on the 1st of May 2008, and so she joined her fund on that date and has had insurances since that time. She has life with link to TPD. She's insured for $100,000. It's only default cover. Same for her TPD. The occupation is any, as is typical with industry default cover. The premium, let's just say it's $200. Of course, it would be in our fact finder, but we don't need to go back to that. The premium type is effectively stepped. It's not quite stepped, but it's effectively stepped. It's through her super, yes, and is to be replaced. No, that's actually quite cost effective, $100,000 worth of cover for $200 a year. We're going to leave that in place. Recommendations to our client. Okay, now's when we go back to our life risk tool and we see that it has done its thing. It has provided us with quotes for, I think I can count 12 different types of insurance there, and we're going to look at a single mum. She's quite cost sensitive. We're going to look at these higher up ones, such as this one, with have the lower premium. Now we compare this MLC one with the Clearview one. Clearview is $14 a year more expensive, but the research suggests that it is significantly better suited to her circumstances. So that is in fact the one that we're going to recommend. Now we can export our results to Excel by clicking on this button, and in doing so we can generate something which of course I've already done, which is a PDF of the insurance quotes, and there they are there. So and we can see this isn't in order. I saved this beforehand, but we can see the Clearview policy there, and that is the one that we're going to go with. Those figures seem slightly different, but that's okay. This is more of a demonstration than something that you can hold me to a specific account. Okay, we then click on the Life Solutions option and we get this. We have a breakdown of the life cover, the TPD cover linked to the life cover, and the income protection cover broken down there with the policy fee added in. Okay, so with that data, we can now go back to RODO and we can start to put in the insurance and the type of insurance. So we get life with linked TPD for an amount of $650,000, and the premium, sorry, I'm not tabbing across there appropriately. Premium $261 plus $358. Let's round that up and say that is $620 for the term life, and again, sorry, the way the screen worked there, Alt-Tab wasn't the right button. $650,000 amount insured, TPD occupation is own, premium type is level, the annual initial commission will be 80%. We're going to say this is post-LIF, 80% of 620, which is 496, and the ongoing commission will be 20% of 620, which is 124, and it is not being held through a super. Link to the PDS. Okay, so what we do is we go online and we find the Clearview Life Solutions PDS and Policy Document Issue 2. Not difficult. You basically Google Clearview Life Solutions Product Disclosure Statement, and it will take you to that thing, to that table. You copy that, copy the address, go back to here, link it into the PDS, link it in there, and it's done. We now need to give reasons for the recommendation. Level premium, oh, hang on, we didn't go level premium, so we've got to go back to where is level, it's a stepped premium. Okay, we can go back and fix that so you can see how the software will actually help you if you make a mistake. I did that on purpose, of course. You want to reduce the initial cost of your insurances as much as possible. In the event that the bus hits you next year, you don't really want to have paid a prepayment for the year after's insurance. Own occupation, you want to hold your TPD insurance outside of superannuation, and you want to be insured for your specific occupation. So you can see there you can tick more than one box. Life insurance in your personal name, you do have sufficient cash flow to cover it, and you wish to avoid the benefit payment being impacted by superannuation rules. Okay, add recommendation. We need to put in the income protection. The amount insured is 5312 per month, and the premium, if we head back to our table here, 1652. I'm going to put in the policy fee as well, which makes it 1748. Stop alt tabbing. 1748 is the premium. Okay, income protection value, it's an agreed value. Waiting period is 30 days. Benefit period is to the age of 65. The premium type is stepped. The annual initial commission will be 80% of 1748, which happens to be $1,400, and the annual ongoing commission will be $350, which is 20% roughly of 1748, and that will not be held through superannuation. Link to the PDS, it's the same one. That's still on our clipboard. We can paste that in. Reasons for our recommendation. Stepped premium. You want to reduce the initial cost. 30-day waiting period. You can't survive for longer than that. You're unable to rely on any family member or spouse to provide you with assistance. You have no other source of income other than employment. To age 65 benefit period, your income will be insured to the standard retirement age. Agreed value because you'd like to have certainty in the benefit you receive, and your income may reduce in the future. You'd like to lock in the higher one now. Income protection in your own name, you have sufficient cash flow, and the premiums are tax deductible. Appendices, you now need to upload your quote, and if we choose files here, we won't go to that one, I don't like the name. We will go to quote compare, and we will upload there. It's put in there. We leave a note for Dover Legal, and nothing more to say. This is a pretty straightforward presentation. We click on the tab to generate the statement of advice, and we then proceed. Now at this point, I've spent almost 19 minutes, other than the time I spent with my client, although of course this could be done in my client's presence. I can now do one of three things. I can view the statement of advice, I can make changes to the statement of advice, and if I'm happy with it, I can submit it for review. If I view the statement of advice, let's have a quick look. Still thinking? Should have opened Word before we started. And we see that we have a 6-page statement of advice, but 2 of those pages are an appendix. We have a 4-page statement of advice. It includes things like links to Dover's client protection policy, thrice linked on the front page, links to ASIC's website, links to the Dover website. So a lot of the information that needs to be provided to clients is provided by incorporating by reference within the RODO statement of advice. Here's all our clients' personal details: children, net assets $390,000, current insurances are addressed, recommendations. Note that we're saying we recommend the existing insurances be retained, and then we're recommending that these new ones be taken up. We have a link to the PDS here that was automatically put in, so we've met our disclosure requirement to provide the product disclosure statement along with the advice, and we've listed out our reasons for the recommendation. We've clearly enunciated our fees, and as you can see, this table also calculates the percentage of the commission that is going as a fee. That's a nice little check on yourself, because of course post the 1st of July 2016 that figure cannot be more than 80%, and that figure cannot be more than 20% of the premium. Once again, we have the client's confirmations and acknowledgements, 3 more references to the Dover Client Protection Policy, and the client signs her consent, and the appendix is all of the quotes that we obtained, demonstrating that we have chosen a cost-effective and highly rated policy. We can then submit this for review. And we need simply to upload 2 more things: a fact finder and the SOA checklist, both of which we have by simply putting in the scanner. Click proceed, and that statement of advice, 21 minutes and 45 seconds after we commenced, has now been sent to Dover, ready for review by the compliance team there. Thanks for listening. I hope you've enjoyed seeing just how effectively you can get your life insurance statements of advice prepared using Dover's RODO app.